The financial sector is undergoing a radical transformation as new technologies, regulations, and social demands are reshaping the way money is created, exchanged, and invested. We will explore 4 future trends that will impact the financial sector in the coming years. Therefore, it is important to understand them and their implications for both individuals and institutions. These trends are: 1. Digital money. This is the term used to describe any form of money or payment that only exists electronically, such as online banking, credit cards, and cryptocurrencies. Digital money has many advantages, such as speed, security, and lower costs. It also enables new business models and innovations, such as micropayments and decentralized finance. However, digital money also comes with some challenges and risks, such as cyber attacks, fraud, regulation, and privacy. For example, not everyone has access to the internet or a bank account, which could limit their ability to participate in the digital economy. So, what does this trend mean for you? Well, if you're a consumer, you might want to explore the different options and platforms available for digital payments. You might also want to be aware of the fees, exchange rates, and security measures involved in each transaction. And if you're a business owner or an investor, you might want to keep an eye on the emerging opportunities and threats in the digital money space and adapt your strategies accordingly. 2. The future of money. The second trend is related to the first one, the future of money. As digital money becomes more dominant and prevalent, some experts predict that physical money could disappear entirely in the near future. This could have significant implications for the economy, society, and culture. For instance, without physical money, there would be no need for ATMs or bank branches. There would also be no cash-related crimes, such as robbery or counterfeiting. On the other hand, there would be more reliance on technology and internet connectivity. Several countries are moving towards a cashless future, such as Sweden, China, and Denmark. However, not everyone is ready or willing to give up cash. Some people still prefer cash for various reasons, such as convenience, habit, or trust. Some countries also face legal or cultural barriers to going cashless. So, what does this trend mean for you? Well, if you're a consumer, you might want to prepare yourself for a possible cashless future by getting familiar with digital payment methods and securing your online identity. And if you're a business owner or an investor, you might want to anticipate the changes and challenges that a cashless society could bring to your industry and market and adjust your plans accordingly. 3. Climate change is causing more natural disasters. This is a serious issue that affects not only the environment but also the economy and society. Climate change can also affect the financial sector in various ways. For example, it can increase the risk of default or bankruptcy for borrowers or investors who are exposed to climate-related losses or damages. It can also create new opportunities for green finance, such as renewable energy, clean technology, or sustainable development. So, what does this trend mean for you? Well, if you're a consumer, you might want to protect yourself from the impacts of natural disasters by having adequate insurance coverage, emergency savings, and contingency plans. You might also want to reduce your carbon footprint by adopting eco-friendly habits, such as using public transportation or switching to renewable energy sources. And if you're a business owner or an investor, you might want to assess your exposure to climate-related risks and opportunities and align your strategies with the global goals and standards for climate action, such as the Paris Agreement or the Task Force on Climate-Related Financial Disclosures. 4. Financial markets control oil, gas, and food prices. The fourth trend is financial markets control oil, gas, and food prices. This means that the prices of these essential commodities are largely determined by the supply and demand forces in the global financial markets, rather than by the physical production and consumption of these goods. This can create volatility, uncertainty, and speculation in the commodity markets, which can affect the economy and society in various ways. Financial markets can also create opportunities for hedging, diversification, and innovation in the commodity sector. For example, futures contracts, swaps, or exchange-traded funds can help producers, consumers, or investors manage their risks or returns from commodity price movements. And new technologies, such as biotechnology, nanotechnology, or blockchain, can help improve the efficiency or quality of commodity production or distribution. So, what does this trend mean for you? Well, if you're a consumer, you might want to monitor the commodity prices and their impacts on your budget and lifestyle. You might also want to look for ways to save money or energy by using alternative or efficient sources of fuel or food. And if you're a business owner or an investor, you might want to understand the drivers and dynamics of the commodity markets and their implications for your industry and portfolio. You might also want to explore the potential benefits or challenges of using financial instruments or technologies in the commodity sector. So, there you have it, the 4 biggest future trends in the financial sector that you need to know about. Thank you for watching, and I hope you found this video was informative and helpful for you. I'll see you next time.